guys, welcome to my channel Investing Untangled. Hope you're all doing well. On this channel, I post detailed business and stock analysis videos and also educational content about stock market investing. And if this is something that interests you, then hit the subscribe button and the notification bell and follow my content here. In this video today, I'll cover JD.com. So this will be a very detailed stock analysis of JD.com. I'll cover their business model, their current and historical financials, competition and risks involved, valuation ratios and intrinsic value calculation, and I'll also touch upon their management team. JD.com is a very large e-commerce giant in China. It currently has 471 million active customers, which actually has been growing every year. And it is known for high quality products. It's also helping not only local brands, but also international brands to be sold within China. So this is what they majorly offer. So they operate in electronics, apparel, home furnishing, FMCG, fresh food, home appliances, and others. And they have been actually known for very quick deliveries. So it's generally same day or the next day delivery. And this is kind of unparalleled anywhere in the world, the kind of logistics and delivery system that they have. Now, looking at their stock price, this stock has actually tumbled quite a bit, all the way from $106 in February of this year. It has gone down to 70s. Now it trades at $76. So more than 25% drop in this stock. And this has majorly been because Alibaba was under investigation, that got fined, and that brought down the whole Chinese stocks. And there are fears that this company might also land up in investigation. And then additional fears have been triggered because there are fears that Chinese stocks might get delisted from the US. Actually, JD hasn't had any problem as such, and instead JD and Pinduoduo have sparked the antitrust probe against Alibaba. So they were the ones actually who complained to the market regulators in China that Alibaba has monopolistic practices, and because of that, Alibaba actually landed up in investigation. And in that sense, this is actually good for JD's business because recently Alibaba was fined and they are being forced to change their monopolistic behavior, and that will benefit JD, so they will also gain some more customers. Now, what makes JD an interesting investment opportunity here is this e-commerce sector, which is massively growing, and it has grown to 52% already in the US. So here you see the growth will still be there, but it is kind of limited. But for China, it is enormous. So China has 17% e-commerce right now, and the growth there is going to be very huge because the internet penetrance is expanding year after year. So here you see there has been a 32% growth CAGR, so compounded annual growth rate, between 2012 to 2020 in the e-commerce sector, and it is continuing to grow further in a double-digit manner, again 10% going forward up to 2023. So this means that there is larger growth potential in China, and with the growing Chinese economy, that propels this growth even further. And compared to the US markets, China has smaller competition, or China has lower competition in the e-commerce space. So JD has recorded a 33% CAGR growth between 2015 to 2020. And here is a revenue breakdown. Net product revenues are the major revenue generators in the business right now, while net service revenues have also been growing year after year. And this is 31% growth rate for the product revenues and 48% growth rate for service revenues between 2015 to 2020. And year over year, 28% growth in net product revenues and 53% growth in net service revenue. So you can see the service revenue sector is picking up quite fast. So what kind of products and services they provide? Here it is. So general merchandise and revenues is a smaller proportion, while electronics and home appliance revenues is a larger proportion of their revenues in the product line. And in the service sector, they have marketplace and advertising services, and they have logistics and other services. They also have financial services through JD Digit. And they are also into cloud, which is relatively much smaller than the Alibaba cloud. Now, to my understanding, this is actually the biggest competitive advantage that JD.com has over other companies. For example, Alibaba does not have a very strong logistics network, while JD.com has a very strong logistics network. It has 900 plus warehouses It has fulfillment centers across major cities in China, delivery personnel of over 190,000 people, and it is Asia's #1 in terms of smart mega warehouses. And this is the reason why they have the quickest deliveries in the e-commerce space. So in this sense, they're different from Alibaba. Alibaba has recently been working on its logistics, but they do not run their own logistics. And this is where JD.com gives them a strong competition because they can deliver products very quickly, much quicker than Alibaba. Now let's take a look at their financials, their historical financials. So starting off with revenues, and all these numbers are in RMB, Chinese currency, 21 billion RMB to a whopping 745 billion RMB as of now. So a massive expansion in their revenues. And what is interesting is that their revenues are actually even higher than what Alibaba generated in 2020. And recently they've become profitable, and they have been increasing their profits quite strongly from 12 billion RMB to 49 billion RMB just in 1 year. Book value of the company per share is actually increasing quite a lot. So this is in US dollars, and right now it stands at 18 US dollars per share, so book value per share, and it started off at $4 in 2014. So a pretty strong growth there as well. Operating cash flows have been growing very strongly, and as of now they stand at 42 billion RMB. And this company has also started generating positive free cash flows, and as of 2020 they registered 30 billion RMB in free cash. Now if you look at profitability, starting with net margins, this company has low net margins because they have a business model which is similar to Amazon, where they buy stuff from offline retailers and then they sell them to customers. So in that sense they lose a lot of margin. But Alibaba is different in the sense that it is an online marketplace. It majorly connects consumers to consumers, and that increases its profit margins. That's how JD.com is different from Alibaba. Returns on equity and also returns on invested capital have been pretty good for JD.com. It recently became profitable, so 17% in 2019 and 36% as of now, which is very, very good. Returns on invested capital are also very good and increasing, 12.89% in 2019 and 29%, so almost 30% in 2020. Looking at their growth rate, you can see that this company has increased its revenues at an enormous growth rate year after year. They've been growing very, very quickly, and this growth trajectory is actually going to continue, which is good for this company and for the shareholders. Let's look at financial health of the company. The company has actually maintained very strong current ratio throughout most of the years. Sometimes it has dipped below 1, which is not good, but for most of the years it has actually stayed above 1, and sometimes even higher than even 2 right here. And right now it is at 1.35, which is very good. It shows that the company can easily cover for its current liabilities. And what is very typical of Chinese companies generally is that they maintain very low levels of debt. And here you can see debt to equity ratio for JD.com is very, very low. I generally am interested in companies where the debt to equity ratio is below 0.5, and here you can see that they are around 0.1 range, which is very interesting. So growth looks good, profitability looks good, margins are slightly on the lower side, but that's the business model of this company, and financially this company is very healthy. Now moving on to understand some of the risks associated with this investment with this company. So the problem is that e-commerce sector is very competitive, even though it's not as competitive in China as it is in the US, but there also the competition has been increasing quite massively. And here you see JD.com's share increased from 21% in 2016 to 24% in 2018. So this is the market share, and it has remained at the same level in 2019. So not much happening between 2018 to 2019, while a very strong competitor of JD.com, which is Pinduoduo, has been aggressively expanding its market share from 3% in 2017 to 12% in 2019. So you can see that the growth for Pinduoduo is even higher. And if these competitors keep expanding their businesses at this rate, that can lead to JD.com losing some of its market shares. And what they do generally is that they will offer some kinds of discounts to attract more customers. But what that does is that reduces profit margins even further. JD.com already has low profit margins, and if they have to attract customers with offers and discounts, that will reduce them even further, hitting profitability. Here you can also see Pinduoduo's annual active user base exceeded JD's in the year ended June 2018 and reached 628 million in the year ended March 2020 versus JD's 387 million in the same period. So Pinduoduo has more active customers compared to JD. So clearly that business is also increasing quite a lot and they're giving tough competition to JD. Another thing that you should look at when you're analyzing an e-commerce company is the gross merchandise value, which is sort of the currency value. In this case, it'll be RMB value of the stuff that has been sold on on these platforms. And for JD.com, it was RMB 523 per active user. And for Pinduoduo, it is 164. So Pinduoduo is lower than JD.com on that sense. But if you see the growth for Pinduoduo, it has been actually even faster than JD. So here it is. We know that this number has grown 50% CNY 117 for the year ended March 2019 for Pinduoduo, while it only grew 15% for JD in the comparable period. So again, showing that JD's growth is actually slightly slower. It's slowing down compared to its competitors. And another major problem is Alibaba, which is the most dominant player in this space there. They have the biggest market share. They have 76% market share there. And they are also actively investing in logistics and giving tough competition to JD.com's logistics and their business model. Now let's check valuation. So right now the price to sales ratio is at 1.04, which is very low. Current price to earnings PE ratio is 15.73, which is again low. And price to cash flow is 18, so it's below 20. For a growth company like JD, if the price to cash flows are below 20, that generally is reasonable. And price to book is 4.14, which is again reasonable for a growth company like JD. Now let's check the intrinsic value of JD.com here using the DCF method. So on Yahoo Finance, the analysts estimate that there'll be a 20%, 21% increase in their revenues next year, while the current year will lead to an increase in their revenues by 26%. So if you go down all the way here for the next 5 years, the growth estimates kind of clearly look off. This is a growth company which has grown at over 20% year after year, and the projections are similar in the same range, over 20% going forward. And it doesn't seem like JD is going to grow by 5% as it is here. So I'll take into consideration the 20% growth rate here, which seems reasonable given their historical performance. Now going to our DCF calculator, again, 20% is what analysts came up with. And since I told you JD is facing a very severe competition, I'll be even more conservative and drop it down to 15%. Current free cash flow of the company is 30 billion RMB. So all the numbers are in RMB here. And I'll use a growth rate of 15% given the severe competition in this sector that JD is facing. I'll do the calculation for 10 years at a 10% discount rate, and I'll use a 3% perpetual growth rate. Right now, the shares outstanding for JD are 1.5 billion. I have all these numbers in millions. And the intrinsic value with these numbers is 713 RMB. So this is not USD. Now we'll convert this, and 713 is $109. So around $110 is the intrinsic value of JD.com based on this DCF calculation that I did. JD looks at more than a 25% discount right now. It's trading at $76 as of recording this video. If you don't know how to do DCF calculation, I've done a full-fledged video on it. I'm leaving the link of that in the description below for you to check out. The analysts at Morningstar are giving it a fair value of $100, while what I calculated, I came up with a fair value of $110. So clearly from Morningstar analysts' perspective, JD is 23% discounted or 23% undervalued right now. And finally, one last thing that I'll discuss here is the management of the company. JD is run by Richard Qingdang Liu, and he is the founder of the company. And this is very important. This is something that I really like. If a founder of the company is still associated with the company and is in the leading role, that is a very positive sign. So he has been the chairman and CEO since the inception of this company. and he has more than 15 years of experience in the retail and e-commerce industry space. So this is good. He's a very experienced guy, and he founded this company, so he knows the sector inside out, and he has proven himself a visionary and a capable business leader, making key strategic decisions such as engaging in the direct sales model, building its own logistics system, and opening its self-owned logistics to third parties. So that's how JD started increasing its revenues on the service side, because it started from the very get-go building its logistics centers and logistics supply chain. So guys, that is the analysis of JD.com for you, and let me know in the comments below if you are interested in JD, if you have been buying some shares of this companies. If you got some value out of this video, please consider leaving a like and subscribe to this channel, Investing Untangled. That'll help my channel a lot. For future videos like this and more educational videos on stock market investing, stay tuned to my channel, and I'll see you in my next video.